Okay, let's analyze this entry on Usdcad using top-down analysis, and let's try to understand. So when we come to weekly time frame here on our chart here, there is something which you can see. We could see this market, yes, it was on a downtrend, which is the biggest part. So up to this moment here, we saw that the market swept liquidity to the downside, and after sweeping the liquidity to the downside here, what happened again? We saw now the market started a bull run to the upside. Yes, first bull run, retraced, then another bull run. So after this bull run, now what simply means that now we want just to get focused on this leg here. Now when we are getting focused on this leg, now we will try to go to a lower time frame. So pushing to a daily chart, there is something which you can see. You could see like this chart, this market had been a strong bullish momentum. And what did we say? Anytime you see a market is on an uptrend, you always look for opportunities to buy. Now looking for opportunities to buy using the daily chart could be a little bit tricky, but if we try to lower down to a lower time frame, like even the 4-hour time frame, then we are going to get something. Now from this lower time frame here, there is something which is now clearly visible. You will see now the market has been printing series of higher highs and higher lows up to this moment here. So when this market was printing this series of higher highs and higher lows up to this moment, automatically we knew that, okay, because the market has not given us that change in market structure to the downside, now we still expected this market to come down here, then keep pushing high. Now that is just an obvious thinking and reasoning which we knew. Okay, that is the obvious thing which we had known, that this is where the market is coming. But now if I'm somebody who trades this market, now I want to check whatever is happening, and whenever I'm checking whatever is happening, I'm looking at what are the best institutional reference points which allows us now to get the market up. Now the first thing which I'll notice is there was this fair value gap here. So apart from this fair value gap, there is also another there is an order block also down here, right? Now if any case I wanted to take this, because I wanted to take this trade here, now what I was doing is that now I was trying to check and look whatever the market will doing upon approaching these two levels. The first level is this, and the second level is also this one here. Now trying to look at those and try to understand what is happening there, I want to see whatever the market is doing. So at first market came and got rejected inside this fair value gap, then I saw the market displacing higher. Now from this moment where the market displaced higher, there is something happened. There was a bearish CISD which was here, and I saw the market reacting from here, then market pushed lower back inside our fair value gap. Now when this market came into our fair value gap, I could treat this fair value gap as our internal range liquidity. Now why is it our internal range liquidity? It is an internal range liquidity because the market has done a pullback inside here, and the next point and the next level which I'm targeting is this one. This is my external range liquidity, and also I can call it as a draw on liquidity. Why a draw on liquidity? Because I want to see market doing what? I just want to see market pushing from down here. Then taking out that high there. But now before doing all these things, I need to know what should the market do, and for me to see it happening like that. Good. Now from this moment there is something which kind of happened. So I saw when this market was approaching inside this fair value gap again up to this level, something happened. We saw that this market traded below the low of the first pullback which was here. So when the market traded below the low of the first pullback here, what happened again is that the candle closed inside the opening of this. Now when the candle has done that, I'll consider that one as a liquidity sweep. Why is it a liquidity sweep? It is just a manipulation to mean that each and every person who bought somewhere here, they come get liquidated before the real move starts pushing out. Nice one. So when they come gets liquidated before the real move starts pushing out, let me delete those ones. So when they come and get before the real move pushed out, now from that point, seeing this happen, I now knew that the market is not interested in coming back to this order block anymore. And when the market is not interested in coming back in that order block anymore, that one is one of the best things ever I can also see. Good. Now after this, there is something I noticed. I noticed that this bull candle closed aggressively above this bear candle. Yeah, so when a bull candle closes aggressively above a bear candle, of course the opposite candle is the order block. Now because to me I'm not interested, because I'm not interested in taking trade or even counter gazing where to take that trade inside that order block, there is something I always check. I always check the use of the CISD. Now on top, the closing of this candle here, or the open of that bear candle, which has been traded above by this bull candle, that is where I always see my CISD. Now this is a 4-hour what? That is a 4-hour CISD. Now each and everything which is happening, I always want to see market coming back here, then taking out there. Good. Now that is where I can come and take my trade from there. Of course, where is my stop loss? My stop loss just comes below that swing low. And now the target is the draw on liquidity. Why targeting the draw on liquidity? Targeting the draw on liquidity simply because now the market has swept the move from the internal range liquidity and we are targeting the external move. And that is how I managed to catch that beautiful trade.